Hi, everybody. This is Gary Dean, and this is our nightly video report for Thursday, December 29th, 2016. This is actually the last video report I'm doing for 2016. Can't believe it went that fast, but it was definitely an interesting year. And from some of the conversations that I'm having with Woody Dorsey and his expectations, I know a bunch of you have listened to the to that little roundtable conversation we had, but there's going to be some pretty good volatility that's going to hit this market, and it's going to hit fairly within, say, the first quarter of 2017. So he's anticipating that we're going to have a couple 20% moves to the downside, but we're also going to get 20 to 25% moves to the upside. So there's going to be big swings, and really I think the key is going to be just being patient. When you try to force feed trades, it's just not there. A lot of the bulls were anticipating the 20,000 on the Dow to get hit. It's probably is going to get hit, but anybody that jumped in and is not is trying to say day trade or do anything like that, the market moved the opposite way. So I'm, like I said, I'm waiting for the really the next setup. It might be to the upside first. We have to kind of wait and see. So let's just go over what I could see playing out right now. So the way that I'm viewing this is that we're just making a large ABC move. So here's our wave A. This is and really the way that it would work would be was an A, B. How was I having this? A, B, and then I think it was, okay, no, this is the way it was. I'm sorry about this. A, B, C of an A, and then we went A, B, C of a B, and then we went A, B, C. So basically what we were doing is just kind of consolidating and there was no impulse of moves. Everything was overlapping, so that's why I label them A, B, C. But the way that I'm looking at it is that we're making that final wave C right now, and once that completes, we're probably going to have a larger move to the upside. Now, it would make more sense if we actually went down a little bit further, down to this 22.32, 22.21. I'm not certain that's going to happen. It's kind of tough to say, but we have bullish divergences right now on the 15-minute chart. So tomorrow's the last day of trading for 2016. Maybe they try to, give it a boost. Really what the bulls have to do is get it above this 22.62. If they do that, then they're probably going to be testing the 22.73 and then the 22.77. So this is really the resistance area that they have to get through. What the bears need to do, they got it through this support level right here at the 22.48. Kind of came close to the 22.43, which was a fib retracement. The bullish divergences that brought in some buyers, and we kind of closed the day right where we started. If we take a look at an hourly chart here, what we notice is that we actually have bearish divergences that are in play. So that's kind of hinting that even the say whatever bounce that we get from these 15-minute bullish divergences, they should fail. And we have the same resistance right here at that 22.60. So if they fail and then come down, what's going to happen is we're probably going to get some bullish divergences, and you can see why the 22.32 makes sense. It's a 23% retracement, so it's a fib line. And it's also a moving average. So if it came down, this may be a spot that you want to buy or dabble in it. If it doesn't hold, then you just look to buy to 22.14. So that would be a perfect scenario as we get some kind of bounce tomorrow, somewhere up into the 22.61, and then we come in on Tuesday, and Tuesday, Wednesday, they bring it down, because the last couple of years, the first couple of trading days of January have been kind of brutal. So they may try to lure in shorts with a quick move down and then kind of jump it back up. And the only reason why I'm believing that we have yet another push to the upside to new highs is we don't have any bearish divergences on the daily chart, and we haven't really had any pullbacks or drops without them. So to make a bet that it's not going to happen without at least a test of these highs here, it's been a losing trade. Now, it doesn't mean that it can't happen, but the way it would set up is short term, like tomorrow, would be a bounce. Then from there, at the 2060, we would get a drop down to that down to the 2231 level, and then we'd rally up, and that would set up the bearish divergences on the daily. So again, the daily chart is looking for another high to set up the bearish divergences. The 60-minute is looking for the bounce that the 15-minute charts are looking for to fail and make another low, which will set up bullish divergences. And the 15-minute chart is looking for a bounce. So everything is kind of lining up. How it plays out, we're going to find out soon enough. But that's really the way that I would be looking at things: is short-term bounce that should fail somewhere at the 2262. If it gets above that, then there's a shot they're just going to keep it going, and we made the low already. If it fails, then that will set up the bullish divergences on the 60-minute charts. So that is about all I have for this final video for 2016. Everybody have a happy new year, and I will talk to you guys in 2017. I should be able to get the morning notes out. I just today and tomorrow, my physical therapy, I have to meet earlier than normal, so I'll try to get them out. If I don't, it's just that I'm caught in that, and really the pre-markets, there really hasn't been a whole lot to talk about. So anyway, that's all I have. Again, have a happy new year, and I will talk to you guys in 2017.